Hi, this is Lara at Elliott Wave Forex with the daily free S&P analysis for the New York trading session dated Wednesday, 11th of August. And it's about 1 AM in New York now. Starting this analysis with a really quick look at an historical monthly chart. We had a long rise to end a cycle degree wave 5, slightly truncated fifth wave to end it. This is actually the end of cycle wave 5, which is an ending contracting diagonal. Thereafter, this is where A at cycle degree started, 3 waves down for A, 3 waves up for B, which is a 106% correction of A. This is an expanded flat correction where C started here and is going to be broken up into 5, and we've had 1, 2, we're working on 3 now. When this whole 5-wave structure to the downside for the C wave is over, it may reach down to 344.09. That's where wave C in its entirety will reach 1.618 the length of A, and that's a pretty common relationship between the two for an expanded flat correction, which this is. Taking you now to that daily chart where this maroon 2 here is this maroon 2 up here, and here's the beginning of primary 3 with a nice 5 waves down for minor 1, followed by an A, B, C flat correction for blue or minor 2. I only have just this one wave count. The alternate is looking much more likely. The main doesn't make any sense anymore. This correction for wave 2 blue, wave A obviously subdivides to 3, B most easily seen as a 3-wave structure, C an ending contracting diagonal has failed to reach beyond the end of A. So this whole structure is a very rare running flat correction. A running flat requires B to move beyond A and C fails to reach beyond the end of A. Most common type of a flat is an expanded flat, so we could have logically and reasonably expected further upwards movement from the S&P before that we saw this major trend change. This structure is pretty rare, so it would have been highly unlikely in the scheme of things with our wave counts, but it is possible. What this means, what this tells us pretty strongly, is that the overall trend, which is down, is very strong indeed, and we may be looking towards some explosive downwards movement in coming weeks as we move into this minor third wave. You're only supposed to see rare running flat corrections because they're skewed in the trend of the major trend direction, because the overall trend is extremely strong. Our target in the first instance for blue 3, 948 is where it will reach equality with 1, 835.59 is where it will reach 1.618 the length of 1. Taking you now to the hourly chart, we were going to look at this recent movement and yesterday's strong downwards movement. And here's the end of that blue 2. Thanks very much to Caesar for doing this wave count. This is his work, not mine, with a couple of little additions from me. He's resolved the problem of me not being able to see this, seeing this as a correction to the downside and expecting that corrections were still down and the overall trend was still up. If we include this piece of movement, we see quite a nice 1, 2, and within 3, 1, 2, 3, 4, 5 for 3, 4, 5. So that's the first problem I had yesterday with this wave count that was putting me off track. Thereafter, this has got a corrective count. This piece of movement here, when looked at on a 15-minute chart, could be impulsive. Overall, on an hourly chart, it does have a corrective count with a 1, 2, 3, 4, 5, 6, 7. But when you look at this on a 15-minute chart, it could certainly be impulsive. This piece here, very clearly, obviously corrective. And there's no mistaking this. We're in an impulse to the downside. That's obvious. There's a nice relationship between 3 and 1 red here within 3 orange. Wave 3 red is just 2.89 more or longer than 2.618 the length of this wave 1. A short-term target for wave 3 orange may lie about 1066.59. At that stage, we may expect a fourth wave bounce, which at that stage cannot move into this wave 1 price territory. Then our invalidation point will move from here down to here at 1106.1. In the very short term, we're looking at a fourth wave correction finishing at the moment, and when that's over, expect further downwards movement from the S&P to the short-term target, and then another bounce for a fourth wave. Someone's asked me to explain what are the differences I see between the stock market and forex markets. I've been analysing forex markets for over a year now on pretty much a daily basis, and stock market's only for a little while and here and there periodically. At first I would have said that stock markets are much easier to analyse. They follow rules and guidelines of Elliott wave more closely, but the recent last few days with the S&P analysis has proved that scenario wrong. The euro follows Elliott wave rules and guidelines beautifully almost all the time. The pound is a different beast altogether and much more difficult to analyse. The S&P in the last few days has proven fairly tricky, but it certainly does follow rules and guidelines as expected. That's all for me with your S&P analysis, and I hope everyone's having a fabulous day.